The market started with strength, but it could not hold on to the weight. S&P 500 finished down 0.40%, closing at the lows after hitting a fresh intraday high earlier. The Dow dropped 0.98%, Russell 2000 fell 1.99%, and the Nasdaq barely hung on, up just 0.18% thanks to big tech. Breadth was brutal. Over 90% of the S&P names closed lower, and the equal weight index underperformed by a full percent. Volume was heavy, conviction was real. This wasn't just a misstep, this was a full pull day. Who got hit the hardest? Banks, credit cards, pharma, builders, travels, REITs, and restaurants. Even small caps and value plays got smoked. But Nvidia led big tech again after getting the green light to resume AI chip exports to China. A huge narrative boost. Software, nuclear, chemicals, AI, and China tech held up strong. So what happened? CPI came in mixed. Headline inflation rose 0.3%, which matched estimates, but core CPI cooled a bit at 0.2%, showing early signs of tariff pass-through on goods. And even though the number wasn't hot, rate cut odds actually dropped. The Fed may need more proof inflation is cooling, especially with new trade risks piling up. On the earnings front, JP Morgan and Citi beat and raised guidance. Wells Fargo also beat, but guided down on net interest income. State Street, BlackRock, and others disappointed on margins and inflows. The bar was high coming in, and the market clearly wasn't impressed. Asset class check. The 10-year yield popped to 4.48%. Oil slipped 0.45% to $66.68. And gold dropped 0.65%. The dollar surged. Euro down almost 0.5%. And the yen up 0.76%. So what does this mean for your portfolio? The Fed might not be done waiting. Inflation is cooling, but tariffs are starting to hit. And bond yields are climbing again. Rate cut hopes are fading. Volatility is rising. This felt less like a cool down and more like the first signs of exhaustion after a long run up. Stay disciplined, stay focused, stay profitable. I'll see you tomorrow morning at the open. God bless.